Now, it seems like the bulls are back in on Nigeria's bourse as the equities markets opens the month of September in the green. This is due to strong performances from the likes of Oando, Eterna, Boa Foods. Meanwhile, analysts expect mixed to positive sentiments at this week's trading, supported by the upcoming Tier 1 banks' financial results and dividend announcement. Victory George, investment research analyst at Meristem Securities, joins us now for this conversation. Victory, thank you so much.
Thanks for having me.
Pleasure to have you on the show today. Let's talk about the market. New trading month, new trading week. What are your forecasts in terms of where investors are going to be bargain hunting?
Yeah, so we're expecting the market to a return of positive sentiments, seeing that the market's closed down in August.
Right.
And we're expecting investors to largely react, like you mentioned, earnings from Tier 1 banks and banks
so
especially.
A new catalyst in the market to spur.
Yes, I'm also saying that there are higher interim dividend payments from ₦1 compared to 50 kobo that paid in 2023. So we expect this to be a positive spur for investors.
Is that going to be across the board dividend payment announcements that we're going to hear this time? Would there be a marked increase or similar levels to what we saw previously?
Well, largely we might be seeing similar levels. This will actually depend on how much of growth we see in earnings for these companies. But the sentiment is quite positive, saying this was any bank. So the expectation might be that we'd also see this kind of results from the other banks. And also Oando, there's been quite a lot of activity on Oando, saying their acquisition of NOAC. So the sentiment largely is positive.
Let's talk to macro inflation. Let's talk about inflation. I mean, the general consensus is that we're going to continue to see a pullback. Not where the CBN has its target at 21%, but definitely a pullback. Talk to us about, your rationale for what is going to be the drivers for this continued drop.
Yeah, for inflation, like we saw in the last data that came out, inflation declined. Though that was largely in line with our expectation, and we expect to continue to see that decline for August, and seeing the different reforms and actions, especially part of the government, the 150-day, 150 duty-free window, import window, for essential food items, and also the recent distribution of fertilizers, which has been quite a headache for farmers. The high fertilizer costs. So that distribution, we expect that to also filter into lower prices for food items. Also, the base effect, the high base effect from August 2023, we expect that to also play in. So overall, we're expecting that decline in the pace of inflation.
Okay, back to the markets. We're still, the forecast is that we're going to see yields at the fixed income market. Also going to see a pullback. How is that? How do you expect that to impact on the equities markets? Should we expect more investors to head to the market?
Well, generally, an expectation for gradual and downtrend in fixed income yields is a silver lining for the equities market. That is supposed to bolster investors' appetite for equity assets. Saying that over the last periods, the elevated yields in the fixed income market swayed investor sentiment away from the equities market. So we expect that to we expect a re-entrant to the equities market.
But we're still in the real, negative real return environment where obviously inflation is still way higher than interest, what investors are getting in terms of profit on their investment. Do you think that there might be a pushback at some point where investors will simply just continue to demand more?
Well, yeah, investors would always continue to demand for higher rates. So like you mentioned, the real rate of return is negative, and on the part of the government, trying to manage borrowing costs as well. That is also expected to filter in the dynamics of fixed income markets. But generally, liquidity will continue to be the determinant of where we'll be seeing yields in the market. But from the trading activities over the last couple of weeks, investors have really been trying to lock in yields, lock in their funds on the longer end of the curve.
Longer end,
in anticipation for that downtrend on my decision.
But one year. NTB is still what, 17–18%. That's still. Let's leave it there. Thank you so much, Victory, for talking to us today. Victory George, investment research analyst at Meristem Securities.